Foreign direct investment driving development. Sustainable growth through knowledge transfer. Technology as a solution. Innovation as a way forward. Over 70 ministers, 140 countries, over 500 exhibitors, 8,000 square meters of exhibition, 15,000 businessmen and investors. The annual investment meeting, Sustainable Development through FDI-induced innovation and technology transfer.
Brunei is one of very few countries, and in fact, 97% of our exports is from oil and gas. And last week, the government announced its first ever deficit in its 32 years history, simply because of the reduction in oil price. And the government announced a 2.28 billion deficit. The two major players in Brunei is actually Royal Dutch Shell and Petronas in the deep water. And because of the falling oil prices, we expect that FDIs in Brunei will certainly fall, and it'll be tough for the next 2 years. But having said that, I have a distinguished panelist today. Between the four of them, we're supposed to have five. One, unfortunately, had a conflicting meeting, but I'm left with four. So we have quality, not quantity. And the four panelists here have more than 100 years total in energy sector experience. I have 32 years in total. I will introduce each speaker individually when I ask them to speak to save time, since we started a bit late. So I will ask Mohammed Shoaib, who's on my immediate left, to speak first. Mohammed Shoaib is the Managing Director of Energy Division of the Kala Holdings. He's from Egypt. He has more than 30 years experience in the Egyptian upstream and downstream oil and gas sector. And of course, in Africa and in Egypt, he's a renowned industrial expert. And Mohammed Shoaib also overviews and overlooks the investment aspects of the firm's organization. I think just to get the ball rolling, maybe you can give your views in terms of the oil prices, the impact of oil price, how it impacts investment in terms of the depressed market, and where do you see oil price going?
I think we started with the hard questions, but let us say that the oil price, we cannot split the pricing of the energy in general with the politics worldwide. And the oil price now come to the same figures that it was at 2005. If we remind ourselves with the pricing of the oil, it was on the previous decades up to 2000, it was average of $20. Start to increase by 2004, 2005 to the 30th, 40th, and reaches the $50. And at that time, the shale oil and shale gas started to increase its production in the United States. And without increasing the price at that time, I don't believe that the United States could produce this oil and gas from the shale, because actually its cost as CAPEX and OPEX is touching the $50 and $60 in the marginal fields. And the real figure that all of us can notice at time being, the number of rigs that in operations has been reduced currently by almost 50% on that figure on last October in the States. In last October, the number of drilling rigs was almost about 1,600, and now it is almost 800 rigs. This is why, because of course, the cost for drilling the well and producing from these wells is affected by the price of the oil that we are having now. This means that, taking into consideration the high decline of shale oil and shale gas, fields. That is almost 40% annually. This means that currently it is not affected for the total production of the states, but it will come at certain time and the production will goes down and the price of the oil, I'm not sure, but let us say that this is our projection, that the price of the oil will come back, but will not come back to the figures of $120 and $110, but it will jump up to the 60s and 70s, and these figures, I think it is good figures for both producers and consumers worldwide.
I think even 60 and 70 is still quite low, considering the cost of production in the North Sea and in Norway. They predict that they need the oil price to be above $80.
This is, okay, when we are speaking about the oil and gas industry, we should speak about integrated industry. Of course, when the price booming for $120, all the services related to the drilling and exploration and development jumped up again. Yes. But when it goes down, all the negotiation with the service company should be started in order to reduce the figures and come back to reasonable figure for both producers and consumers and the economy of the world itself. Because certainly, the economy, it is very important. The FDI in oil and gas in the area of Middle East, I don't believe that it will be affected. Right. But in the States, of course, and the expensive oil, it will be affected.
Certainly, yeah. Next to Mohammed Sharif, it's at the Tournier Cole. I think it's no stranger. He won an award last night. Congratulations.
Thank you.
It's founder and chairman of Sahara Development in Nigeria. Sahara Group is an energy conglomerate, I think, with a strong presence in Nigeria and West African countries. Tournier has extensive experience in the energy sector and is now moving into financing, actually, looking to undertake an acquisition of some target banks. So maybe that's why he's going to do all these FDIs through the new acquisition. Tony would like, certainly I gather you like to talk about the situation in Africa in terms of FDI.
Correct. So, well, thank you very much. It's an honor to be here to speak with you this morning. Just some facts to frame Africa properly. I see a lot of Africans here, but also our brothers from the Middle East and across the world. Africa, to a lot of people, is one country, but it's not. It really is 54 different nations, cultures, people, tribes, tongues, very, very diverse. But you have 54 cities in Africa with a population of over 1 million people. 54. So that's about double the size of Brunei. You said 400,000.
More than triple, double, yeah, 100 times more.
So 54 cities exceed 1 million people. For FDIs, this is a number that you need to be aware of. In 2025, it's projected that Africa will have 1.4 billion people. 1.4 billion people by 2025. Investment, FDIs, long-term. Think long-term and you would know. Roughly half of African countries today are fully democratic. As we speak right now, Nigeria is going through another democratic process, and the other half are well on their way to democracy. We have in Africa today, outside of natural resources, outside of mines, oil and gas and all, you have contributors to the GDP that are coming from telecoms, infrastructure, coming from the energy sector, from real estate, from construction, from agriculture, a wide range of places outside of what everyone knows Africa to be. When you talk about Africa, most people are thinking of mining, oil and gas, but there is so much more that is being done in Africa today. We hear a lot about conflicts in Africa. Of all African countries, you probably have only 6 today that have some form of conflict. Every other place, there's peace, there's stability going on today. Africa has a very young population. Well over 60% of Africa's population today, of this 1.4 billion that you would see in 2025, over 60% of that are under the ages of 30. So you have a huge workforce to deal with. And we also have 5 countries. The thing now is that 5 countries in Africa account for 50% of the FDIs that are coming in, which means that there's a huge, huge gap for where FDIs should come into Africa. But most of the most of the FDI is coming into the other countries is coming in as aid, and this is a problem.
Right.
Africa does not need aid right now. What Africa needs are partners to come in and work with them. Within the energy sector, in power generation today, in agriculture, it has huge arable land to come in for agriculture purpose. So what we have in Africa today, someone talked yesterday about housing. We're talking about infrastructure, rail, ports, construction.
Yep.
You have all of this, which are FDI destinations coming in for Africa today. I'm asked what the oil price means for Africa,
Yep.
what it means for Nigeria. For me, I have a contrary view. I think one of the things that I pray for is that the oil price will stay low for a little while. The reason being that when you have low oil prices, people focus. For one thing that I've seen within African countries and governments today is that because the oil price is low, you can now have an engagement on diversification.
Yes.
An engagement in looking into other areas that are not oil and gas that the countries need for development. And it's opening up for private sector to come in, engage with governments in policies, which is one of the things that we need to do, policies and discussions with regulators on how to allow investment to come in other fields. And these are areas that I'm hoping that we will be able to engage a lot more
Yes.
in how companies, investors can come into Africa and engage in investing in other areas outside of oil and gas.
So basically in Africa, what you're trying to do is to change away from receiving financial aid, but getting people to actually be part of the investment in that country now.
Correct. And you need to. You need to. So aid has been a problem for many years. And I think we need to really stop the culture of giving aid into Africa and investing in the people, investing in education, investing in infrastructure, and there are many areas to invest in.
I mean, I was in London last week because Brunei has a major problem. As I said, 97% of our exports in oil and gas. So this low oil price is actually a wake-up call that the government has to do something. And as you mentioned, Tony, we are looking to diversify our economy away from oil and gas. We have to diversify. His Majesty has taken the view that we need to do drastic measures. And the government has come out with a lot of incentive and attractive packages, I think, for companies wanting to come to Brunei. But obviously, a lot of countries are doing that as well. Our third panelist, actually is none other than Niraj Argawal. Actually, he's based in UAE, so I'm not sure whether any of you might know him. But he's a Chief Financial Officer and member of the board of Crescent Group, board of directors. Niraj has been involved in a number of Middle East joint ventures in the energy sector. And in fact, his organization, and I think Niraj himself, came up with the first, forward-looking accelerated US $1 billion sukuk in the region. And actually it received in 2013 the Restructuring Deal of the Year award. Perhaps you can tell us whether a bit more about that deal and maybe how we can use that moving forward in terms of a new initiative, new development in FDIs for this region as well.
Sure. So let me tell you a bit about us, Crescent Group. Crescent Group is based in the UAE in Sharjah. We're a 40-year-old family-owned business house in the second generation now. Our range of business varies from oil and gas production, port and logistics, power plant construction, healthcare, investments. I mean, over the last sort of 2 years, we've looked at more than 200 investment opportunities in the MENA region particularly. Our footprint is mainly in MENA, but we are looking at opportunities outside MENA as well. In oil and gas, we currently have operations in 3 countries. We produce something like 130,000 barrels of oil equivalent per day, mainly gas. Egypt has been a huge success story for us, and I'll tell you a bit about it. In port and logistics, we operate in 8 countries. We're the first Arab company to be given permission to start a container terminal in the United States. We're starting one up in Florida. So it's a huge, huge feather in a sort of coup for us to be able to do so. We're also doing some very difficult projects in a country like Iraq where we're setting up power plants. We're setting up power plants. We've just completed a third power plant recently in Iraq, and again it was applauded, and given the conflict there. So I would say we are a regional company which looks at opportunities and risks on a very realistic basis. It may appear as a risk from London or New York, but we look at it much more on a practical reality basis, and really looking at risk where the risk is and looking at opportunity where the opportunity is.
Yeah.
Business is not easy, for sure. I think when you have to roll up your sleeve and get your hands dirty, it's not just about FDI, it's actually getting your hands dirty in the country, meshing up with the culture, the people, and figuring out a practical way to work with the government and the society. Some of our success has been in Egypt. We invested close to $1 billion in Egypt, and we have sort of multiplied our oil and gas reserve 4 times over the last 4 to 5 years. Egypt, as you know, has been through some political turmoil, but I'm pleased to say that last year we did very well. I mean, collections were historically a problem, as would be when you have an upheaval. But I would say that last year has been a very good year, and we see Egypt as a great area from an opportunity point of view. We have invested in Saudi as well. We've invested in a port in Saudi, both in Jeddah and Jubail. I'm looking at my Saudi friends and saying that. And again, we see a huge opportunity in Saudi, really on an integrated basis, not just. So our business is container terminal, and we are the world's largest privately owned container terminal company. It's the combination of capital, skills, and trust and confidence that the shipping lines have in us that we bring it together to any country. And in Saudi, for example, in Jeddah, we've been able to improve operating efficiency by nearly 30% in the last 2 years. So there is a real opportunity to make a difference in the region. I'll stop here unless you want me to focus. I don't want to go through what you've covered already. But if you'd like me to share a specific experience, happy to do
Maybe
so.
share the experience on the forward financing that you did then.
Okay, so financing has been a huge success for our group. We have traditionally, I call the Crescent Group a factory of ideas, where you put relationships, capital, and an idea, all 3 of them together, but work on it on a practical, synergistic basis, not pie in the sky, but on the ground, and look at it to see what makes money. And are you sure you're going to get the money? Are you sure how much confidence you can have in a government? Are you sure you're not going to have problems? So all 3 of them put together really is the way forward. We created a public company in 2005 on the back of this. It was very enthusiastically received in the region. We had a very successful public offering. We raised $80 billion in about 10 days.
Right.
And then after a year, we did a sort of a sukuk offering, which is what you're referring to. The mindset we have is just because you're from the Middle East region, you must not start with a disadvantage. You must look at the best in the world and say, why can't we do it here? And this is exactly the model that we have. In 2007, what you're referring to, we noticed that we needed to raise money for a project. Egypt in particular needed money for further investments. We were looking to tap into the capital markets, but most public offerings by way of bonds then were linked to the share price of the company that was existing then as a conversion. We didn't accept that model. We looked at what the precedents were in other parts of the world, and we said, look, we must take the money, use it, get the benefit from it, and offer a conversion price 2 years from now. So it took a little more selling. It took a little more effort in terms of selling, but we were successful. We were able to raise about $1 billion in about a week. But it took a lot of work before that to get it to it. I would say as a group we are very conservative, but we do a lot of work up front to be sure we've understood the risk, we've understood what we are getting into, and then we get into it. We don't get it right every time. Things do go wrong, I would say to you, but we try our best to make it work.
Okay. Yeah, I need to learn from you how to raise $1 billion. Because the problem with Brunei, being a rich country, not many people want to lend to us. True. They say you should be a lender, not a borrower. But that's a challenge we have in itself. And you mentioned that it's a, 40 years family-run business?
It's in the second generation now.
Second generation, yeah.
But I mean, the other thing which is very helpful, if I might take a minute of your time, is our owners, all three of them, the father and two sons, are engineers from Cambridge.
Okay.
The elder son is a Harvard MBA, and the younger son was voted the best CEO in the Arab world 2 years back. So the owners are not just people who provide capital and relationships. They're very hands-on in the business. You know, I mean, most emails get responded within 2 hours.
Yeah.
Most decisions get taken within a day. So it's a very dynamic organization in terms of it. And stakeholders take a lot of comfort from the risk when they see the owners directly involved in driving it.
Okay, thank you. Last but not least, the youthful-looking guy on the left is Henry. Henry has more than 20 years' experience in FDI. He's the CEO of a company in China, WaveTech, and one of the fastest-growing consulting and technological company. And he has authored and published more than 50 books. And one of his publications is an authority guideline as to how to attract FDI, entitled Bargaining and Multinational. So on that note, Henry, I think perhaps you'd like to give some high-level comments on FDIs and maybe your prediction on price as well. I think, where we're going in the future and the direction of FDI in view of the fluctuation of oil price.
Yeah. Well, good morning, everyone. It's a really pleasure to be here, and I'm already learning a lot from the esteemed panelists here, so it's really been a great panel so far. So I'm just going to give you maybe a high-level picture of foreign direct investment, or FDI, in the energy sector in terms of the trends which we are seeing in the market. And by we, I mean mainly the Financial Times, because we work very closely with FDI Intelligence and Financial Times in terms of tracking FDI. So I'm just going to give you an update of what's happening in the market. And then, do you want me to touch on both renewable energy and conventional? Or
up to you.
Yeah, so maybe I'll touch on both conventional energy and renewable and look at the different trends in both of those different types of energy. My own personal experience, I would say, is mainly in North America. I actually cover Canada, Canadian market for FDI Intelligence, Financial Times, so I have a lot of experience in the Canadian market. Of course, a huge energy producer. We also work a lot in the United States. In particular, I'm working currently now with the state of Louisiana, which has been at the forefront of oil and gas, and also the shale gas revolution in the US as well. So we've had quite a lot of experience trying to get investors into Louisiana and Canada, so I can reflect on some of those experiences as well. First of all, as the first speaker alluded to, with the decline the really steep decline in the oil price, in particular in the United States, that has had a big impact on shale gas investments. Already we've seen so far this year a 25% cut in energy investment in North America. That's just so far this year. If you look at the S&P 500 the top energy companies in the US, they've already cut over $8 billion of energy investments. They've announced cuts so far this year. So I mean, there's a huge decline in energy investment taking place in the United States and Canada because of the decline in oil price. It's quite interesting though, overall, in North America at least, this is seen as positive for the economy. So the decline in the oil price is expected to cut GDP by 0.3%. But because of the increase in consumer purchasing power is having such a big boost to the US economy, they're expecting overall that the GDP will increase by 1% in the United States because of the decline in oil price. So specifically in the US, it's overall seen as having beneficial impact on the economy. And it was really interesting to hear, especially from an African perspective, that you thought it could actually be a positive trend as well overall. Of course, it takes time. When you cut energy investment, that has an immediate impact on the economy, not in the case of the US, but other countries, on exports, on foreign exchange earnings, whereas the impact in terms of the other industries that benefit from low energy prices, let's say like the chemical sector or manufacturing sectors or construction or agriculture, on consumer spending, that takes time. It doesn't have that immediate impact. So I think the short-term impact on economies is very negative, but the longer-term impact, depending on the country, is more positive of lower oil prices. In terms of investment, actually, we recorded a slight fall in worldwide foreign direct investment in the energy sector last year. This is based on Financial Times data. So last year we tracked nearly 200 foreign investment energy projects around the world. These are greenfield investments, not mergers and acquisitions and so on, but actual greenfield investments worth about $80 billion. If we look at the first quarter of this year, so we have kind of real-time data so we can see like what's happening right up until today. We recorded 39 energy projects around the world so far in the first quarter this year. Last year it was 47. So the number of projects has come down, and this is just conventional energy, by the way, not renewable energy. However, if we look at the capital investments, or the actual amounts companies are investing, we're still a little bit ahead of the first quarter this year compared to last year, and I was really surprised by this. I thought with the declining oil prices that there'll be less energy investment, especially from my own experience in the United States. So I kind of looked at the data a bit more to see, okay, who's attracting this capital investment? And it was quite interesting. So looking at the countries which seem to be really booming for energy investment right now, I think India seemed to really stand out. I don't know what the experiences of the panelists here, but looking at our kind of, let's say, FDI data, India seems to be attracting a lot more foreign investment. I mean, just to give some examples, first of all, UK company Vedanta Resources, they've already invested $30 billion in energy investment into India. They're now looking at a similar amount again over the next decade, 30 billion. Looking at another company, Semcorp from Singapore, they just announced a $1.5 billion coal plant in India. And there's also, I'll talk about in a minute, some big renewable energy investments going to India. So looking at some of the other countries, Indonesia as well seems to be attracting more and more energy investment. And then, of course, Africa. I mean, there's a big growth we're seeing of FDI energy investments going into Africa. So it's interesting, you look at India, Indonesia, and Africa, what do they all have in common? They're all some of the fastest and largest developing, emerging frontier economies in the world. They all have huge need for energy investments. And looking at the trends you outlined for Africa, which I would say would be very similar for India as well, that's only going to increase. So I think they offer huge opportunities and will continue to for foreign investment. No matter what the oil price is, I don't think it matters necessarily so much there because they need energy. The question is, how are they going to produce it? Is it going to be, gas, coal? Is it going to be renewable energy? Are they going to start building nuclear power plants? I mean, it's the mix of energy which is the decision of where's going to be best to invest in and what the governments are trying to attract, what the regulatory regimes allow. So I think the energy investment in the kind of long term is very positive because of the need for energy in the world. Another big example would be just announced, which is the biggest one we've announced so far this year, is a Russian company, Russian Technologies. They just announced a $4 billion crude oil refinery in Uganda. So that's another example of a big investment project going to Africa. Looking quickly at the renewable energy, I mean, the renewable energy sector was booming at one point. I mean, in 2011, we tracked 750 FDI projects in renewable energy around the world. That's about 3 times, or nearly 3 times as many conventional energy. So at that time, it was booming, and actually in capital investment was beginning, in terms of FDI only, was beginning to kind of reach the same levels of conventional energy. Now that collapsed, that renewable energy investment, mainly because governments couldn't afford the subsidies anymore to subsidize those investments. So in 2014, we tracked 361 projects. That was half the peak of 2011, and $52 billion of renewable energy investment. Right now, the renewable energy market seems to have leveled off a bit. We've actually recorded identical numbers of projects and capital investment in renewable energy for Q1 2014 compared to last year. So it does seem to be leveling off. If you look at the investments, it's very similar. The renewable energy investment in the US has pretty much collapsed. I mean, there still is investment taking place, but with such a low oil price, it's just not making sense to invest in the US in renewable energies, except for those states which continue to offer incentives. But again, we're seeing big investments going to Asia, going to Africa, going to India, and also Latin America. We're seeing some big solar investments, in particular in Mexico and Brazil, taking place. The biggest renewable energy investment we've seen so far in 2015 is in India. Sun Edison, a huge US company, they're investing $4 billion in India in photovoltaic PV, in the solar manufacturing and plants in India. They're also investing billions in Honduras as well. We also saw a Saudi Arabian company, ACWA. They just announced a 1.2 billion solar park in South Africa. So these are just some examples of the trends which we're seeing. In terms of the oil or gas price, I mean, I really don't have necessarily the expertise to comment on that, but the comment about hovering around $50, $60, $70 sounds about right.
Any of the panel like to add on the renewable energies or biodiesel and anything related to that subject? Yeah?
If you please.
Yeah.
Okay. I think it is very important for the climate of this world is to consider that the renewable energy is very important, independent on the oil price. Because, yes, to generate power from the renewable, it is expensive than the conventional oil and gas. But if we go back to the pricing or the capital required for renewable since 10 years, we will realize that the price today is representing 10% of the price 10 years ago. This is one. Second, I'll speak about Egypt, for example. Each square kilometer can produce 50 megawatt solar, which almost about 250 gigawatt hour annually, and can reduce the emissions of CO2 by 200,000 ton a year. This is in order to imagine how this is very important for the climate of the world. Second, the mix of energy that my colleagues speak about. It is very important to increase the adding value for the natural resources that we have, and it is a depleted energy, which is oil and gas. Oil and gas is a depleted energy. Then, if we think about what is the chain of downstream in order to add value for this depleted energy, and I'll take example the gas. If we will take the complete chain for petrochemical, in order to add value, each dollar will have at least $25 on the complete chain. Then, when we are speaking about FDI and we are speaking about world economy and our area that is reaching with oil and gas, we should concentrate on both, adding a value for the depleted energy, oil and gas, and increasing the investments, FDI, in renewable, and mainly the solar. It is very important not to only suffer from the hot rays that coming from the sun, but it is very important to utilize that in order to generate power, saving the depleted energy for adding value projects.
Yeah. There's no point having solar in Iceland where there's no sun. The problem we had, we tried to do a biodiversity project in Brunei, but the major raw material is actually palm oil for biodiversity. But that 10% content costs more than the remaining 90% that you use gas. Exactly. So it became, an issue as to whether it's cost-benefit matters. I would like to open the questions to the floor, if there's any questions.
Hello, good morning to you. Thank you for your presentation. My name is Alia from Al Bayan newspaper. You spoke about your expectation for the oil prices. You said the fair price is between $60 to $70 per barrel. We're expecting, there is an expectation that Iran and the countries 5+1 to strike a deal. Tomorrow is the deadline. That means they are going to lift the sanction on Iran. That means Iran is going to produce more oil. Is that likely, if it's happened by tomorrow, is that likely to change your expectation for $60 to $70 per barrel? And also, I have, this is my first question. My second question for Mr. Henry, you spoke about in certain countries like India, Singapore, and Africa, the FDI in the energy sectors is increasing. Could you just tell us, away from that example of the company from Saudi Arabia investing in South Africa, could you tell us about the region? Because we know the GCC countries, they're heavily investing in the energy sector, including the renewable energy in Africa. with the prices go down, which affect the GCC country, are we likely to see a cut down in such investments? Thank you so much.
Okay, thank you for your two questions. The good thing about being a moderator, I don't have to answer it. So I'll leave it to the panel to tackle the first question, and then Henry, the second question, obviously.
All right, so let me take a stab at the first question. I think oil, and someone said on the panel that oil and politics go hand in hand. Where the price is going to go over the next 2 years is anyone's guess. But one of the things that we're probably certain about is that everyone in the oil industry is working within that band of somewhere between $50 to $60 and expecting it to remain within this band over the next 2 years, regardless of what happens. So Iran may start pumping oil today. What's going to happen is you will just have a balance, you will have other factors balancing out, and we're going to likely remain within this band over a protracted period. I'm not sure that there's anyone who is in the oil and gas sector today that is projecting that you're going to see an $80, $90, $100 oil price over the next 2 years. No one is even in that mental framework now. So I think it's safe to say that everyone who is planning any kind of long-term plan today is planning within this band.
Also, I'd like to add one thing. If we go to the oil price, and what is this, we cannot split the oil price for the gas price. Because previously, we have only the oil. And this oil, the quantity of the oil daily that is required worldwide was X. Today, the oil is almost about 90 million barrels a day, but we have in the market 150 million barrel oil equivalent a day. The balance is gas, either LNG or natural gas. Iran was bombing, okay? Nobody can say that Iran previously on the last number of years wasn't bombing oil. It was bombing oil. What you can say, it will increase its production. But take into consideration one important point. On the last couple of years, the growth of the economy in China, India, Japan, and most of Europe countries were less than the previous years. And at the same time, the expected growth for the economy in Africa, Middle East, and Latin America is going up. With the number of populations increasing annually, that will affect the price of the energy in general on the coming years.
Okay, Henry?
Yeah, I think there's, I mean, we talked a lot about supply and the politics as well. I mean, it's, the price of anything is, independent of politics is supply and demand. So I mean, demand side is interesting as well. So like if you look at, say, like India's economy is now forecast to overtake China to be the fastest growing major economy in the world over the next years. So there's going to be huge demand coming from India. If you look at, say, Japan, I mean, at least what I read in the newspaper shows Japan is going to, start nuclear power, investing in nuclear power. So I mean, that's going to, reduce maybe demand for oil and gas going to Japan as they produce nuclear power. So that can, reduce demand. If you look at, say, Europe and North America in particular, I mean, there's huge investments taking place in people's houses, in factories, in energy efficiency. So I mean, every single year the efficiency increases in North America and Europe in particular. So that decreases the demand, the amount of energy needed for every car driven, or for running your washing machine and so on and so forth. So there's a lot of conflicting trends, I think, in demand and supply, which makes it so difficult to know exactly what's going to happen. And it also depends on government incentives as well for things like renewable energy. I mean, that is quite driven by the regulatory environment as well, which changes all the time also. In terms of investment from the region, going overseas, I would say the panelists, it would be really interesting to hear from your businesses, where you're planning to invest. You know, are you still going to be investing heavily in this region, you know, in Africa? But at least in the trends we're seeing, I don't think that the low energy prices is going to hold back, you know, investment into developing economies, because they're energy hungry, and I mean the demand is there for energy.
Can I add to? I'm sorry. Regarding where investment is going to go, at least from what I'm seeing in Africa, one of the things that we need to bear in mind is that when we talk about an energy-hungry continent, Africa definitely is. And sub-Saharan Africa, in terms of power generation and distribution, is probably the hungriest.
Yep.
And one of the things that we're seeing as we talk about renewable energy and we talk about diversity in energy, it's extremely important that we're aware that the countries have whatever resource they have to generate power, they will use it.
Yep.
Whether it's coal, whether it's peat, whether it's gas, they will use that because they need it. And renewable energy might be one, again expensive, but it's something that is necessary today that people will use. We're developing thermal plants in Nigeria,
Yep.
in Ghana and Ivory Coast, where gas is a problem. We started developing, and Sahara is doing this, and working between Nigeria, Ghana, and Ivory Coast in delivering LNG, which used to go. One of the things that we've seen about the US becoming self-sufficient is that now you have a lot of LNG looking for a home within Africa, and Africa is now looking internally, and we're now distributing gas internally within Africa for power projects, which in the past used to go into the US. And this is how the whole change in dynamics is benefiting Africa the way I see it.
Okay, one very quick question and a quick answer.
Sorry, I just want to add. I think one important thing to clarify is when you think of low energy prices, it does not mean it's you're producing oil below your cost. You know, in the MENA region, the cost of production is very low.
It's getting so exciting.
So, you know, I mean, I would sort of guess estimated, but I would say it's below $10 a barrel generally. So, you know, I mean, it doesn't matter. But I think the problem in the MENA region is the governments have an obligation to spend money to build infrastructure, provide for the population, which creates a break-even point higher than $40. I mean, there are some published statistics available which tell you that the break-even point for the government budgets are anything from $60 a barrel to $120 a barrel, even within the GCC states. So a lower oil price means you have less money to invest. It does not mean it's unprofitable to use. Now you contrast and compare this with the North Sea. In the North Sea, at a $40 oil, and you compare and contrast it with the US as well, it's not profitable to produce from shale, oil and gas. Okay? In North Sea, similarly, over the last sort of 6 months to 1 year, we see a number of producers who've either shut down or have run into loan defaults because they have loans and borrowings, and at $40 oil, they can't sustain it. Now, Middle East in that sense is very unique. Now, I'll give you our perspective. You know, we're looking at a number of projects in the region. You know, particularly North Africa has been through, if you like, an Arab Spring. But there are opportunities now becoming available where you can get comfortable either with the fiscal terms or with your ability to being paid. Egypt is a very good example. You know, Egypt has had in the last 1 year a number of rounds, and they have been very successful. They've seen a huge amount of interest from the international community, and you wonder why. You know, I mean, the government in Egypt has not really paid the oil companies today, but they have been pretty sincere. They have been very engaged with the communities, and so I mean that's an example to you. Sorry, please go ahead.
I allow one very quick question and one very quick answer.
Yes, very quick. Said Moulin, I'm the head of the Renewable Energy and Energy Efficiency Agency in Morocco. We managed in the country to attract FDIs, more than $12 billion for wind, for solar. We managed to do that because we had this legal point clear for any investors, because we have domestic price also competitive. But what we want to say that we open the market to the private sector because we have this domestic price. cement plants, steel industry, mining industry, they're developing their own wind parks today without any subsidy. It's completely competitive. That's one thing. But what we need for Africa is more grid infrastructure to develop such projects. Second point is linked to energy efficiency. As we managed to have FDIs for renewable energy, but also for usual energy like coal power plants and combined cycle gas power plants, we would like to look how we can attract FDIs for energy efficiency in housing, in transport, in industry, in public lighting or agriculture. We managed to have now to develop solar pumps for agriculture